This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Five of a kind. The Dow records its fifth straight record close, and financials lead the way ahead of the start of this week's meeting of Fed policymakers.
Not business as usual. Students from across the globe used to flock to American MBA programs, but that appears to be changing now.
Best drama, not on screen, but behind it, as streaming newcomers solidify their grip on the television industry. Those stories and more tonight on Nightly Business Report for Monday, September 18.
Good evening, everyone, and welcome. Well, the rally just keeps rolling on Wall Street. The blue chip Dow index made a quiet climb to its fifth consecutive record close. The S&P 500 also hit an all-time high. Wall Street cheered a big defense industry deal. More on that in a minute. And investors put money into financial stocks ahead of the start of a two-day meeting of Federal Reserve policymakers. And many say the grind higher will continue as long as economic growth remains solid. The Dow Jones Industrials gained 63 to 22,331. NASDAQ was up 6. The S&P 500 added 3. Bob Bazzani with more now on the week ahead, and the markets move higher.
The markets rose to new highs again today. There's several factors moving stocks. First, strong momentum. Crossing 2,500 in the S&P was an important psychological breakthrough, and the market has shown no signs of breaking down. Europe's coming back strong as well after a weak summer hurt by the stronger euro. The S&P is up more than 1% this month. If we end here, the S&P would be up 6 straight months. That hasn't happened since 2013. Then there's North Korea, where tensions for the moment are lower. President Trump spoke at the United Nations for the first time today and gave a moderate speech. Stocks moved up after his speech, but the hard part is ahead, where he will be seeking to persuade world leaders to put even tougher economic sanctions against North Korea. Finally, there's the Fed meeting. No rate hike expected, but the Fed will announce normalization of its balance sheet. And Chair Janet Yellen has already said it's going to be like, quote, watching paint dry, meaning it's going to be slow and it's going to be designed not to surprise anyone. We'll see. That's what they want. For Nightly Business Report, I'm Bob Bassani at the New York Stock Exchange.
So here to discuss how all of the factors you just heard about could shape this markets this week is Michael Farr. He is president of the money management firm Farr, Miller & Washington. Good to see you, Michael.
Nice to see you, Sue. Thanks.
So it's a Fed week. Are we risk on? Or are we risk off, given all the things that Bob has really detailed for us?
We are risk on once again. I mean, you know, we had the hurricanes coming at us. We had missiles from North Korea flying over Japan. And I'm smiling, and I really shouldn't be. I mean, these are dramatically serious, horrible things going on around the world, and potentially more horrible things to come, at least over in North Korea. Markets just go higher. That risk-off trade was very temporary, where bonds rallied. They've given back all of that rally. The dollar has been weaker, but stock prices are going higher and making new highs. Nothing is keeping stocks down here lately.
Is there anything that would cause you to change that view, Michael? In other words, should I be now being a little prudent and taking some profits that I may have made?
You know, Tyler, I think anytime the market is making new all-time highs, as it has here, you have to remember the old rule that you buy low and you sell high, and this certainly isn't low. So you have to be buying with caution, and you have to be very careful about the exposure that you have out in the market. And, you know, I think one of the things that's been going on that's been driving stocks is people have been buying the dips, and I think people have been shorting stocks, and when they short them and the stocks continue to rally, you know, the people say, you know, we'll cover those short positions. They're driving them higher. So I think there's a lot that's been driving stocks higher until we reach that one point. Nobody can ever predict it. And maybe it's a North Korea thing, and maybe it's something we can't think about yet in terms of whether we get tax reform or not. There's going to be that one moment where people say, I'm not going to buy this dip.
Would that
it happens every time, but it's been looming out there, and we've been waiting for it for over a year and a half.
Right, we have. Might that moment surround whatever the Federal Reserve decides to do or not to do this week?
I doubt it. You know, Sue, this seems still to be the most dovish Fed we've ever had in the history of Feds. Now, I think that too little attention is being paid to this roll-off and taper of this $4.5 trillion portfolio. The Fed's set to do it. This is a tightening move. It will remove accommodation. So it's a big deal. But they're not going to tighten. And I think people, the street, will pay more attention to the language that says we might not tighten for the rest of the year than they will actually this rolling off of the portfolio.
On that note, Michael Farr. Michael, thank you very much.
Thank you for having me.
Michael Farr with Farr, Miller, and Washington.
And now to the economy. Home builders are growing a little bit more cautious following Hurricanes Harvey and Irma, with maybe another yet to come. According to a new report, builders are growing concerned about the availability of labor and the cost of building materials. But once the post-hurricane rebuilding process is underway, the industry does expect builder confidence to return to the higher levels of last spring.
Investors are always keeping an eye on geopolitics, and today, Defense Secretary James Mattis says the U.S. has not shot down any of North Korea's missiles, including the 2 that recently flew over Japan, because they did not pose a direct threat. Meantime, U.S. military forces carried out several flights over the Korean peninsula in joint bombing drills with allies amid escalating tensions between Washington and Pyongyang.
And it is those rising tensions that led to a deal in the defense industry. Northrop Grumman will buy Orbital ATK for nearly $8 billion. That sent shares of Orbital up 20%. Northrop rose more than 3%. And as Morgan Brennan reports, the acquisition puts Northrop Grumman front and center in the military space race.
Space and missile defense. The forces behind Northrop Grumman's nearly $8 billion deal for Orbital ATK. The surprise acquisition could close next year, and Orbital, at least to start, will operate as a standalone segment. On a conference call with investors, CEO Wes Bush said this will enable Northrop Grumman to better compete for government contracts, especially since space is becoming a more crucial part of the U.S. security strategy.
Together, we will be able to serve our customers' growing need to re-architect the approach to the broad space mission in light of the increasing threat profile in that operational domain. We can no longer treat space as a permissive environment.
Orbital's portfolio will expand Northrop's reach in space, precision-guided missiles, and missile defense, 3 key areas poised for big growth, thanks in part to North Korea. Analysts say the deal will drive sales on top of the surge already expected, as Northrop benefits from its secretive B-21 stealth bomber, as well as more F-35 fighter jet orders, for which the company is a top supplier. It marks a big shift in strategy from share buybacks to vertical expansion that's sure to spur industry reaction.
You'll see some of the larger companies, competitors of Northrop Grumman, like Lockheed Martin, Boeing, reassessing their portfolios, seeing ways they should make adjustments to possibly deal with any sort of competitive threat they see from the combination of Northrop Grumman and Orbital ATK.
But it also raises questions about whether the government will give the green light, since defense is highly regulated and already very consolidated. To that, Northrop and Orbital say the tie-up will cut costs and create more competition for certain types of contracts. Shares of both rocketed on the news, but so too did smaller defense suppliers. Names like Aerojet Rocketdyne, Harris Corps, Kratos Defense and Security Solutions, and AeroVironment, which analysts say are now sure to become takeover targets. For Nightly Business Report, I'm Morgan Brennan.
Still ahead, the pressure is building on insurers as the fight against opioid addiction intensifies.
European countries have signaled that they want to hike taxes on internet firms, but they're divided on how to do it. Finance ministers from 10 European Union countries over the weekend announced their support for a new plan that would tax the revenues of companies like Google, Facebook, and Apple that have been accused of paying too little by booking profits in low tax rate countries.
We feel that those companies should pay their fair share of tax where they create value and profits. There was a first discussion. We already have some proposals, like a common consolidated corporate tax base. We are working in the framework of OECD and G20, and we want to work in that global fora.
Now, the plan faces some pushback. Smaller members of the bloc, like Denmark, Luxembourg, and others, have warned that higher taxes could potentially push innovative companies away from Europe. The EU hopes to reach an agreement by year's end.
The Department of Justice has reportedly opened an insider trading investigation into Equifax. According to Bloomberg, regulators are looking specifically at executives who sold stock before the company disclosed a data breach which exposed the personal information of 143 million Americans. 3 senior executives sold almost $2 million worth of Equifax shares. A statement from Equifax said the executives had no knowledge of the breach before they sold. Shares of Equifax, though, are off more than 30% since that breach was disclosed earlier this month.
The opioid crisis has focused attention on whether too many doctors prescribe too much of the highly addictive painkillers too often. But now a spotlight is on the role that insurers and the pharmacy benefit managers that run their drug programs play in steering patients toward opiates instead of more expensive but less addictive alternatives. Meg Terrell reports.
Insurance coverage can have a huge impact on which medicines are prescribed and taken by patients. Now, a group of state attorneys general is examining health insurers' role in the nation's opioid epidemic, what they call the preeminent public health crisis of our time. The group of 37 state attorneys general wrote a letter today to the CEO of America's Health Insurance Plans, or AHIP, the lobbying group for health insurers, urging it to encourage members to review their policies around opioids. They asked AHIP's members to, quote, encourage healthcare providers to prioritize non-opioid pain management options over opioid prescriptions for the treatment of chronic non-cancer pain, saying no comprehensive effort to address and end the opioid epidemic can ignore the, quote, ever-increasing number of prescriptions for opioid painkillers. The letter comes after a New York Times ProPublica investigation suggested health insurance policies could be contributing to opioid prescribing. The analysis of Medicare prescription drug plans covering more than 35 million people found that almost every health plan covered common opioids with few restrictions, but that some non-addictive, more costly pain medications require additional steps to receive coverage. Moreover, the investigation found that it can be easier to obtain coverage for opioids than for treatment for opioid addiction. In addition to the letter to AHIP today, New York Attorney General Eric Schneiderman sent letters last week to the 3 largest pharmacy benefits managers, or PBMs, seeking information about their role in administering prescription drug benefits amid the opioid crisis. Both insurers and PBMs say they're addressing the issue. Express Scripts, a PBM, pointed to actions it's taken to prevent opioid addiction, including counseling. And AHIP said in a statement that it shares the commitment of the state attorneys general to eradicating the opioid epidemic in America. Quote, health plans work closely with doctors and nurses on the safest, most proven, and most effective approaches to manage pain, the insurer group said. Many health plans have instituted new programs that are helping to dramatically reduce how much and how often opioids are prescribed. The focus on insurers and PBMs adds to already heightened scrutiny on drug makers, distributors, pharmacies, and doctors, all while the opioid epidemic rages on. For Nightly Business Report, I'm Meg Terrell.
UBS turns bullish on Caterpillar, and that's where we begin tonight's market focus. Analysts at the firm lifted their rating on CAT from buy to neutral, saying the equipment maker is expected to benefit from a rise in private construction activity here in the U.S. UBS also cited Caterpillar's growing cash position and said it is seeing new evidence that the company's improving earnings will continue. So shares rose 2% to 123.83. Known short seller and Citron research founder Andrew Left is taking aim at his next target. In a report released today, Left called technology maker Ubiquity Networks a total fraud, saying the company's operating margins don't line up with the industry average. He also said it's only a matter of time before the SEC launches an investigation into that company's finances. Ubiquity shares fell just about 8% to 50.62. Energy and water analytics company Itron said that it will buy Silver Springs Network for $830 million. Silver Springs provides Internet of Things technology to help cities and utilities operate more efficiently. Itron said the merger will not only grow its footprint, but also expand its services. Itron rose 5% to $76.50. Silver Springs spiked 24% to $16.10.
On Friday, we told you that financial firm Evercore gave a bullish call on the chip maker NVIDIA. Well, today, the company received more praise, this time from Bank of America. Analysts there raised their price target on the stock to $210 a share and said NVIDIA could be the dominant product supplier to the $30 billion artificial intelligence market. Today, NVIDIA rose 4% to $187.55. Specialty chemicals maker Huntsman said it expects this quarter's results to improve. This even as the company said it suffered operational issues at some of its Texas plants following Hurricane Harvey. Huntsman said the expected strength in earnings will come from solid performance of its polyurethanes business. Huntsman rose nearly 3% to $28.64. And ahead of its earnings report tomorrow, the shipping giant FedEx said it will change shipping rates for 2018 deliveries. The company will raise rates by an average of about 5%. The price hikes take effect January 1st. Shares finished the day up 25 cents to $215.08.
An MBA degree used to be the gold standard for American students and also international ones. While Americans still strive for a business degree, schools are finding that students from abroad are having second thoughts. Kayla Tausche has our story.
Rohan Mishra came to Indiana to study business after jobs in energy and finance in India. The face value of his U.S. education, $142,000. When he graduates in 2019, he hopes to work some of that off in the U.S. if he can get a visa.
I would like to stay here for at least for the next 4 or 5 years because it will be much easier to pay off the debt from the U.S. than probably going back to India and paying it from there.
Other students weren't as willing to take the same leap. International applications at IU's Kelley School fell 19% in the last year, a trend familiar to other business programs. 75% of two-year MBA programs surveyed by GMAC saw fewer applicants from outside the U.S.
They are actually making a fairly long-term bet.
Sangeet Chofla is the CEO of GMAC, which administers the admissions exam for business school.
Not having clarity of what the outcomes will be and what will happen when they exit business school is leading them to look at other options.
Options outside the U.S. have been climbing in prestige. In the year 2000, U.S. business schools represented 32 of the top 40 rankings in the world. By last year, that number was cut in half. The highest ranked U.S. business schools are not seeing declines, but others, like University of Iowa, are. Its Tippie College of Business in August announced it would end its traditional two-year MBA program and focus on more specialized degrees instead.
There's no question that for the university and for our colleges, there's a financial impact. Anytime out-of-state students, and that means out-of-country students as well, anytime that number goes down, that's going to make it harder for us to make up the finances, that the tuition.
GMAC's survey shows school administrators anecdotally citing anxiety about living in the U.S. and fears of finding employment and visas.
They're hearing things in the news and they're a little bit worried. Will they be as welcome as in previous years?
Visa programs have largely remained unchanged, but President Trump in April called for reforms that ensure companies hire American. In August, Trump backed a bill that would shrink legal immigration. Chofla says the uncertainty has ripple effects overseas.
As long as some of these bills in Congress around H-1B visas do not get closure, that uncertainty will get in the way of students actually making an application.
The upshot, more U.S. students are applying and going to business school. But administrators say diversity at B School is paramount for graduates getting hired at large multinational companies and worry there will be an impact on hiring if the melting pot gets lukewarm. For Nightly Business Report, I'm Kayla Tausche, Washington.
Joining us now with more on this is Dennis Yim. He's the Director of Academics for the Kaplan Test Prep. Boy, I wish I'd taken more of my Kaplan prep before I did my law school exams. So, Kayla just talked about international applicants to business schools. They are down. She said American applicants to business schools are actually steady to up. What's the total look like?
Yeah, it's, you know, as you know, Kaplan has been in the business for many years. And when we have times like this, we like to remind ourselves that the business school admission trending is cyclical. So if you think about the landscape, usually when the job market is poor, you see a lot of prospective applicants very interested in applying for business school because they want to, you know, make themselves more marketable and hope that the job market will improve as they exit the program. But in times like this, in 2017, as we've seen in the past few years, we've seen the job market be very robust. And for that reason, there's more risk for these prospective applicants. They don't want to leave their jobs. They have student loans to pay. And it's a very interesting...
Undergraduate student loans to pay.
Well, that's correct, yeah. And it's hard to kind of make that investment in pursuing one of the most expensive graduate programs.
Right, but does it pay off?
Absolutely.
If they do pursue it?
Absolutely. That's the current interesting kind of situation we're in. GMAC has also released information that both compensation in the short and long term and the job market has never been better for a business school graduate, for an MBA, for someone with an MBA degree.
The cumulative difference over the first couple of decades is really huge. Something like they make a median of $2.5 million more if you look at the total year-by-year income than a person who doesn't have it. Tell me about, as Kayla mentioned there, where the weakness in applications is most acute, it would seem, would be in the lower tier schools. The top tier schools are doing just fine, right? The Whartons, the Harvards, the Stanfords.
That's correct. Top tier programs will be less likely to feel that drop in the applicant pool, whereas lower tier programs will have a harder time kind of attracting these applicants who already have strong careers and strong outlook.
Does it come down to price then? I mean, Harvard doesn't necessarily have to cut its prices, but does maybe, I mean, Kayla profiled the University of Iowa. Do they have to become more competitive on some sort of a different basis?
There's a lot of factors that students have to consider. I want to touch upon the current political climate as well. We talked about the uncertainty of what happens after they leave business school. So there's a lot of different factors that go into it. Price is one of them. The amount of time it takes to invest into one of these programs is another. We see a lot of competing programs in Europe and Asia that are gearing towards more one-year programs to allow applicants to spend less time in school and immediately re-enter the job force when the market is...
And they are becoming more competitive with the domestic programs. And another thing one of the deans said there is when you have fewer out-of-state or out-of-country applicants who don't pay that discounted in-state tuition, that proves a problem for those schools, doesn't it?
That's correct.
The numbers don't work as well.
That's correct. We actually did a survey in August of over 100 business school admissions officers, and nearly 70% noted that they were worried about the number of international applicants they would receive over the next few years.
All right, Dennis, thank you very much.
Thank you.
Appreciate you being with us.
Thank
Dennis
you.
Yin with Kaplan Test Prep. All right, coming up, the power of streaming video takes center stage, literally.
Toys R Us could file for bankruptcy as soon as this week. There are reports that the toy retailer has hired a law firm to address its $400 million debt load coming due next year. Like its rivals, Toys R Us has struggled to keep up with the increase in online shopping, which has forced retailers to cut prices. And according to the Wall Street Journal, some of the store's suppliers have reportedly held back on shipments unless Toys R Us pays for deliveries in cash. Shares of toy makers Mattel and Hasbro fell in sympathy today.
The longtime Cisco executive John Chambers is stepping down as chairman. Chambers has decided not to stand for re-election to the company's board of directors when his term expires in December. Chambers stepped down as CEO about 2 years ago. After 20 years at the helm, he served as CEO at Cisco from 1995 to 2015, making him one of Silicon Valley's longest tenured chief executives, and he grew Cisco into the world's biggest networking equipment company.
It is television's biggest night, but the big traditional networks didn't steal the show at last night's Emmys. Instead, it was streaming video. Julia Borston takes a look at the internet giant's push into the TV game.
It was a momentous night on the red carpet for digital video, making gains on broadcast and traditional TV.
The Handmaid's Tale!
Hulu made history, the first streaming company to ever win the Emmy for Outstanding Drama, the most prestigious prize of the night, for Handmaid's Tale, winning 5 awards total after the streaming company co-owned by the media giants won its first Emmys just last year. Hulu's growing investment in originals and its bet on adapting the controversial novel paid off.
I think it's a great move for them to have done this. And taken a risk, because it's very risky material if you watch it. And I think it says a lot about what consumers are interested in, which is compelling content wherever it's created.
At Sunday's big ceremony, Hulu's 5 total wins put it in 3rd place, behind HBO with 10 wins and NBC with 6 awards. Hulu was ahead of Netflix with 4 Emmy Awards last night, while Amazon came home empty-handed, with no awards at last night's show. But Amazon may be working on another way to get a piece of the television business. It's reportedly started talks by small TV channels as it looks to build its video business worldwide.
We all know Amazon is a big data play. So if they were to get involved from that perspective, they would have access to viewing habits. This is a mobile-first technology. It would allow them access to the phone. It would really just enhance the knowledge base they already have on the data front.
As traditional pay TV providers increasingly look to offer skinny bundles with fewer cable channels, Amazon's Prime Video offering could take advantage of the niche channels looking for more distribution. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Amazon Prime members can also stream NFL games on Thursday night, and if you're lucky, you'll be able to watch one of the most valuable football franchises as ranked by Forbes today. For the 11th straight year, the Dallas Cowboys hold the top spot, now worth $4.8 billion, despite not having been to the Super Bowl in 22 years. Number 2, the New England Patriots. They've been to the Super Bowl plenty, worth just under $4 billion. Rounding out the top 3, the New York Giants, worth $3.3 billion. Number 4, Sue, my Washington Redskins.
I noticed that.
Yes.
Packers not on the list. Oh, well. That does it for us tonight. I'm Sue Herrera. Thanks for joining us.
I'm Tyler Matheson. Thanks from me as well. We'll see you back here tomorrow.